14.2%. This is the most important number to remember when it comes to investing in the stock market. And once you understand it, you can't lose money. Bold claim, I know. Bear with me. Let's look at the S&P 500, which is just the US stock market, and around 60% of the global stock market. So the rest of the developed world pretty much mirrors it. Since 1980, per calendar year, i.e. January to December, it's been up 75% of the time and only down 25% of the time. So basically, every 3 out of 4 years it goes up. Decent odds if you ask me. Your average annual rate of return since then has been 8.8%. So you've made nearly 9% a year. And the intra-year decline, i.e. the top point to the bottom point, is 14.2%. It sounds complicated, it's not. Let me explain. In January, the stock market is at 10. Over the next couple of months, it drops to 8. But then the market picks up and it finishes the year on 11. During that year, there's been a 20% intra-year decline, but it's irrelevant because you've made 10%. Fun fact, 2020, when the world were going to end, had an intra-year decline of 34% from February to April when all the COVID shit started kicking off. But for the whole year, it finished 18% up. So it turns out the world didn't quite end. Although you wouldn't have known that if you'd have just watched the news. If you understand these numbers, you are in a very strong position to be a successful long-term investor. So when you turn on the news tomorrow and you hear, oh, the stock market's retracted 11%, you can smile and say, well, that's good. It's normally 14. You won't hear on the news that this is like clockwork and it's completely normal and it will bounce back. They'll just blame it on Brexit or COVID or global warming or Facebook, or you get the gist. They're just trying to scare your headline. This movement is called volatility, which is a bullshit financial jargon way of saying prices go up and down. The markets will, not can, but will go down as well as up over the short term. But over time, they can only ever go in one direction, and that's up. As decade after decade, this is proven. Don't let what you heard on the news this morning impact your decisions about money. It's just noise. Just shut it out. I said this over and over again, but too many people make 20, 30, 40-year investment decisions based on the last 30 seconds worth of news. There's only ever two periods. There's a rising market and there's a sale. It really is that simple. The declines are temporary and the rise is permanent. Make sense? Makes sense. Oh, and if you want some more free pearls of wisdom, go and check out my website, familywealth101.com, where you'll find tons of free shit. Blogs, videos, ebooks, and if you want to be kept up to date with more free shit, make sure you join our world famous weekly email.